There's something you need to understand about the market, especially right now, in that it is built to make as many retail traders go through pain as possible. And so when we do look at these kinds of things, you have to keep that in mind. And that is why we are talking so much lately about the put to call ratio. What happened today? XLU did back off, and most likely the SPY should follow that, right? XLU did back off. We click over to that. You see how it backed off, and the SPY is way up here. The XLU is about to go test the bottom side weekly expected move, while the SPY is actually testing its upward expected move. So the reason that this is happening is because retail is trying to front run these downward signals, and the market maker's algorithm is not triggering to sell off the market because puts are too expensive. Retail's actually being pretty intelligent here, but you see how it backfires on you. This is proof in real time that the market is rigged, and you have to understand that when you are trading. Okay, so for today, we are mostly going to look at 2-hour signals. I do not want to go into the shorter time frames, especially how people are getting tricked back and forth, and they can't handle these shorter time frames as of right now. All you need to know is if and when this 2-hour does cross over and the put to call ratio is more in favor of the call side being expensive, that is when the stock market will sell off. That is the move that is built to hurt the most retail traders. As we can see right now, we are squeezing and squeezing and squeezing. Nvidia, we're going to talk about that, squeezing, squeezing, squeezing. The put to call ratio is at 0.95, right? 0.95 in the post market at 0.953. That means that currently puts across the board are more expensive than calls. So what is the market maker going to do? The algorithm is going to go up and up and up until the actual retail traders, most retail traders, give up and start to buy calls and make puts cheap again. So let's get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta going forward. We're going to look at GME and AMC as well. Solid little run-ups there. We have some key levels that you have to break through. Let's get into it. Now that we really know that the market is rigged against you, we can take that into consideration and look at a 2-hour chart. This is very, very simple. All we need to know is if and when this is going to turn over, we most likely need to at least see the put to call ratio be below 0.8. The last time it was below 0.8, right around here, what did we see in the market? Well, we actually got decent data where the market should have headed up. And guess what? It pulled back. It pulled back. Now, why did it pull back? It's because in this area, all the retail traders were being smart buying calls, and that's not what the market maker algorithm wants to see. So it is going to go with whatever way is cheaper, and therefore we see this little sell-off. Then people go heavy to the put side, and we pointed that out as well on the PCC when we were live. We noticed that now it is the time for us to bounce in the market because puts are now more expensive than calls. So the algorithm then triggers and says, okay, we are ready to send this thing higher. And ever since then, retail is right to be making this move. They're right to be shorting, but they're kind of wrong to be shorting because the algorithm is against you. We are going to keep squeezing. We are going to keep squeezing as long as that put to call ratio remains high. And that is the most likely scenario at this point. As XLU is actually down here, we most likely will catch up, but where that top comes in, it is when the 2-hour actually curls over on this MACD. You see the divergence up here. You're making it in real time. We talked about this forming, and it's surprising to me that it is surprising to others that this is forming right here when we talked about it so much, guys. Okay, so to the upside, we can pay attention to 537.04 to the upside and 532.30 to the downside for tomorrow. Not a big range, so we could just trickle up all day as people keep trying to short this, but once they actually give up, that is when puts will become cheaper. Once people switch to calls on the retail side of things, that is when it will be ripped away. This is the market that you are deciding to trade in, and I totally understand if you would like to just start to invest instead, play those higher time frames like a monthly or a weekly. It makes way more sense for someone who cannot handle a market like this. The Qs, we've made a massive move. Nvidia is a lot of the reason for this, but we're setting up that divergence. Okay, we said it doesn't have to be made, but if Nvidia is going to go higher, boom, there's the Qs. It's heading higher. So a lot of stuff going outside of their weekly expected moves. That is this purple line here, 458.77. Know that we have a 68% chance to close down here by Friday close. Very important to understand. So I think tomorrow, if we're going to see more and more retailers try to short this thing early, shorting it early is never the move. You want to wait until the indicator tells you what to do. When whenever I'm telling you like, oh, downside is probable here, it's not because I think at that point, it is because I can say, oh, this crossed over on this MACD. There is a probability to go negative. That is what I am overall saying in these videos, and you would really, really benefit from just reacting, not trying to call some kind of top. Now we can correlate things to this. We could say, yeah, we have potential to go higher from here as long as that put to call ratio remains higher. Okay, then maybe we end up in this area right here. The market should not be higher here. The market should not be higher here. We just got a way higher PMI than we should. Inflation should still be on the table. Those yields should be heading up. But we're seeing the yields head down, and people look like they're running to safety secretly behind the curtain. Not really behind the curtain. You're just seeing TLT rise up. So it's just rising up dramatically. It's breaking through a channel. We'll look at that in a little bit. So we want to pay attention to some levels here, 466.69 to the upside, and we do have 460.37 to the downside. And we also want to pay attention to 468.25. If we're going to see a lot of puts come in, then we're going to keep squeezing. And maybe right when we hit this little area right here, people say, screw it, I give up. I'm a retail trader and this market only goes up, so I'm taking calls. And that is the exact thing that the market maker's algorithm wants to happen. They want you to believe that this and Nvidia cannot go down by calls. And once a lot of retail traders do, you're going to get a rug pull. Apple made some great signals up in here that we are going to talk about, mostly looking at a 15-minute. I think it's a little cleaner than the 30, but did the 2-hour cross over yet? No. No, it did not. So the 2-hour for Apple is still bullish. We're seeing that pull down in the post market here, but this is a great trade setup. We put this on Patreon. 30-minute overall, you kind of violated some divergence, but you got a steep one here on the RSI. 15-minute just looks a little bit cleaner, but you're still in positive territory by the center line. So I am managing this trade. I am in this trade, and I wanted to point that out. But if this curls up, what can we see? We can see another move upward. If people keep trying to short these individual stocks, they're going to do the opposite. They are trying to rip as much money away from you because they need to pay for the AMC and GME thing. All right? I say it 100 times, but if this wants to curl up positive territory, we can make a new high here. We can go outside of that weekly expected move, make that. And if the put to call ratio is looking a bit higher or lower here, meaning people are starting to take calls to the upside, that is when they will rug pull this. But as of right now, you did get a confirmation of this divergence right here on this bar. This is mainly when I took the trade. I started to scale in back in these areas, but this is mainly when I took the trade. And now we could see some downside. All I have to do is manage that risk. Okay, but notice I'm doing this because I'm very, very skilled at it. What I'm telling you to do is not to front run anything. Let your indicators just do all the trading for you. You just push the buttons. Tesla on a 2-hour, we still have potential to turn up from here, okay? If you saw this wick and everyone's saying, oh, Tesla's dying, we said 2 days ago, trap, 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 tons of traps here, because right when people get all the puts into it, what do? They rig it to the upside. So right when people get really bearish, right when retail gets really bearish on Tesla, they're going to rip it the other way. The options market is 100% rigged, okay? And you have to understand that, and that's why managing risk is very, very important. And if you can't handle it on these shorter time frames, I encourage you to still take that course. It's $100. You can still use it on a monthly scale. We talked about it live today, and we showed you how you can catch big pushes in the market, and you don't have to sit in front of your computer. You can go away from your computer most of the time for like 8 months, come back, and you're up 40%. Okay, so we're paying attention to these types of things. If the 2-hour curls back up in positive territory, we might have some upside for Tesla, but we have to watch out for the next trap, maybe around 180.92, because trap. So Tesla's not looking like the best one to trade on the daily scale. If we start to roll over into negative territory here, that's going to be bad things for Tesla. Now, the problem with a lot of these stocks going up for today is they're all heading towards their weekly expected moves. So pretty much every stock that saw a big upward push, I think Amazon's is right above it, you're running into weekly expected moves, and Amazon's not even fully really positive on the 2-hour. It could roll over at any time. So as you get outside of there, the probabilities are with you for a 68% drop. Does that mean take a trade? No, let your indicator tell you when to take the trade. Let your indicator tell you when to take the trade. Even right now, if it's going to remain bullish, it's probably going to see some kind of sideways price action and then turn back up into positive territory. Now, Nvidia, what were we saying right here at this level of a 200? Okay, they're trying to make you make a decision. They're trying to get you to, either right here, I believe they were trying to get you to take a bunch of calls on Nvidia, a bunch of calls on Nvidia, a bunch of calls on Nvidia. The opposite happened. People tried to short this at 1200 because we saw the PCC going up, so we can assume that people were trying to short Nvidia again. And someone even came live and said, puts are more expensive than calls right now for Nvidia. That's crazy. The stock keeps going higher. Exactly. The premiums will go up in price on the put side if people keep trying to front run this. If retail is mostly trying to short here, that's what they do. They send it sideways. They make you think it can't go higher. And then right when you think it should go down, it squeezes back up. That is the algorithm at work. This is one of the most manipulated stocks. I have said this multiple times for the last like 3 weeks. I am not trading Nvidia. Even live, I said, yeah, I'm not going to trade this thing. Nope. Something is off about it. Something doesn't look right. I'm not going to try to do it. I'm going to be a good trader. I'm trying to teach you guys good habits. Now, the problem with this is everyone, a lot of people in my chat even are trying to front run this signal. I have said it over and over and over again. Please do not front run signals. You're never going to be able to call an exact top. Sorry about that, dogs barked. You're never going to be able to call the exact top. It's very, very difficult to do. Someone will be able to, but that will most likely be luck. That will most likely be luck. What you want to do is find out when momentum is telling you it is shifting to the downside so that you are going with the trend. So you are trading like water. You're going with that stream. And this crossing over, giving you a red bar down here would be that indication of that higher probability for at least a pullback in this area. Now, it could reverse the trend. If you were like, hey, I just want to get in a little bit, okay, an hourly still has not crossed over. So there was no reason to take a downside trade for Nvidia yet. They are squeezing retailers. Retailers are trying to buy shorts earlier. They are trying to do it too early, and you need to pay attention to that. The 30-minute never crossed over in this move. No chart told you that Nvidia was going to pull back or go down. No chart told you. I just pulled up the 30, the hourly, and the 2-hour. None of them, not one of them said that they were going to curl back down. You need to wait for things to confirm. You will be a better trader. Manage the trade. It's rigged. So if this does cross, yeah, they can bounce it right back up. My course here will tell you how to not get screwed by this move, and then maybe your timing is right over here, and then this drops through 1140. So we're paying attention to these things, but I highly encourage you to stop trying to front run everything if you don't know how, if you have no reasons to front run anything. I know how to do it, so I talk about it. I'm going to stop talking about when I front run a stock. I'm going to stop talking about it because I do not want you guys front running anything, because this is what can happen in a short squeeze. You try to front run something, you're just adding to the problem. You're just allowing them to squeeze it higher. AMD doing exactly what we've been talking about. Okay, we noticed the 30-minute divergence down here. Now, I see this environment, even me, I see this environment. I take a little trade, I get out very quickly because I think this could pop down at any time. It could just roll over right now and be negative. So I am not in this trade anymore. I took it for a little scalp this morning, made 30% and was out. Okay, I was very quick with it. What can happen from here? Still the thing we've been talking about the entire time. We go up towards that weekly expected move, we make some multiple point divergence, and then we see this thing curl down into negative territory. So should you be really bearish on AMD right now? No, it's right by the center line. You're contrarian bullish, but you're right by the center line. There's no reason to be bearish on the 2-hour chart until that rolls down. Okay, once that rolls down, that is momentum telling you, hey, I'm rolling down. We could see a pullback, and guess what? I'm right by negative territory. So we might see more than a pullback. And the reason we might see more than a pullback is because this daily can cross over. And then you can say, okay, maybe I hold on to that a little bit longer. I manage my risk on a 2-hour chart. It's literally that simple. Just let the charts, please let the indicators do the trading for you. All you have to do is click the buttons. And look at this, we finally got that pop we were talking about. I said Meta most likely does flash positive for a second and sets up another point of divergence. Let's see what's going on with this here. We're setting up another point of divergence. Now, this could just base out, curl back up. We have to trade like water. Who says this isn't going to be like a head and shoulders? Who says this isn't going to be a divergence up in this area? You don't know, but if you just listen to your signals here, what are you seeing across the way? Well, now we're violating those divergences. We're seeing a big upward move. So this is a pretty parabolic move. It's outside of the weekly expected move at this point. If that rolls over, you're still pretty close to negative territory, and then you just want to manage this throughout. But you can see some more wonky behavior going on. They are trying to steal as much money from you as possible because they need to pay for GME and AMC, and they don't want to use their own money. They probably don't even have enough money to cover what is going on over there. Seeing all those signals, and they're a little bit wonky on the 2-hour now for Meta, so what could you do? Well, what if I just looked at a daily chart and I waited for a red bar? What if I just looked at a daily chart, I waited for a red bar, I see a red bar, I take a month out play, Meta goes down, I make money. Like literally, it's that simple. But people want to front run stuff. People want to find the best cloud. People want to do this. It's pretty simple. When people are up here, they are going to buy a ton of calls. When it drops down, they're still going to have those calls. When this crosses over, they are probably still going to have those calls. Your puts will be plenty cheap, and then you can ride that move down. AMC really doing some good stuff today. AMC and GME both doing some good stuff, trying to curl up, taking back all the moving averages. But we kept pointing out we know levels. Okay, 518. That's pretty much your weekly expected move. It's a resistance level that we pointed out back in these areas. I believe we pointed that out. We needed to get through, and then it just so happens that this week that is the weekly expected move. So we're leaving it on the chart. I'm just going to tell you guys that, but we're not able to close above it. In order to see something crazy, we need AMC to close above 518. That's when you can see something crazy. Now, if we look on a 2-hour, that thing is still positive in positive territory. So nothing bearish about AMC yet. If that rolls over, watch out, negative territory. We can go all the way back down to 437. Now, the 30-minute is still positive. Now, this has divergence. We posted it to Patreon just for a warning for people going into tomorrow, saying, hey, there could be some major weakness. We could roll over that 2-hour on AMC and we can go all the way down to 437. So this is the type of signal where you would say, oh, I would take a short on this. So why would I start to go long here? Yeah, you can go long here and stuff like that. But we're just teaching you about how to really read these indicators. That's what we're trying to do here. You see the divergence, you see the divergence, you see the divergence. Awesome. Now, if this crosses over, most likely AMC does pull back, maybe goes to 437 again, and then we have to be patient and wait for that to curl back up. And maybe this is the big moment. You have to trade back and forth, trade like water. GME, you're starting to see the similar signal. Okay, so since you closed up at these levels, now you do have that divergence where if it rolled back down, it would be that confirming. And if that's able to go negative, you're going to roll over this 2-hour. Now, as of right now, it's positive on the 30-minute. That's a good sign. It's positive on the 2-hour. That's a good sign. And there's something big around here that you need to pay attention to. It's the daily chart. As of today, a huge thing happened. We turned up daily momentum on GME. That is a big, big signal. Okay, so this is the daily chart saying, like, hey, momentum just shifted up to positive, and it crossed up in positive territory for GME. A big move can come, and it is outside of that weekly expected move. So GME is making the ballistic move that it needs to get some kind of squeeze. But the thing is, this thing is rigged. You have to pay attention to it. If this 30-minute does curl down, it's right next to negative territory. You could see a further pullback. I'm just being honest with you, but I don't like to fight against that daily momentum. So would I be selling because I see this type of thing right here? Me personally, as a trader, my strategies, I would not, just because I don't fight against daily momentum. There's no reason for me to think that GME is going to fall down when a daily MACD has just curled up. Was the play that I was talking about that I took, and I just scaled in for my second time, and I'm willing to scale in again. Right now, we're seeing a 30-minute divergence down here that can roll up a 2-hour, but this is just going to keep dropping off. But notice it's not dropping off like dramatically down anymore. It's really trailing off, kind of tapering, and we do see a little 30-minute divergence here. We have 30 minutes all divergence all the way across. So here and here, you have those divergences, and that can roll up the 2-hour, but that's as long as the PCC can turn up. Now we could turn up the 2-hour, that can go positive. I think that is happening. We talked about this week. We talked about it this week, how we are most likely going to see if it's going to be very, very bearish behavior. We're going to see people get excited, buy a bunch of calls, and then we're going to see a simple curling up of the 2-hour that then creates some kind of higher low for volatility. So we are paying attention to this, and XLU is already turning down. So this is not a good look for the SPY and the Qs. Real quick, just to note, the stock market went higher, and so did the dollar. Okay, insiders are selling. That's all we have to say here. Insiders are selling. If this daily MACD crosses up, that's going to mean bad things for the market. But know that the dollar can go up for some time before the market actually starts to go down. So the market can go up and the dollar can go up at the same time. That just tells you insiders are selling, and you want to pay attention to weakness in those overall moves. So that's what we're really paying attention to with that. As we look at a TLT, we did get this breakout. It's going ballistic, and this doesn't really make sense with the data we got today. PMI was higher, so you would expect yields to want to go higher and TLT to drop off. That didn't happen. I think we're seeing a little flight to safety, and something very bad might be right around the corner, but we still want to pay attention to the signals. I say those types of things and people go in and they front run stuff. Let the signals tell you what to do. It will make it so much easier on you as a trader. Okay, so the main takeaway here is really we have to just react when our indicators actually tell us the signal. You have to just be reacting. You can't try to front run stuff because you see a crash signal going down while the market is going higher. All you are doing is fueling the problem even more. I'm sitting on my hands. That's why I'm playing volatility. I'm not shorting anything. I'm buying volatility. That is very, very different, right? Shorting the market would be, hey, I'm taking shorts on the SPY. Okay, so it's very, very different how I'm doing it right now, and I'm not adding to the problem in any way. So pay attention to that, make sure things are confirming, and you will be just a little bit better off as a trader, especially if you manage that risk. The course right now, it's only $100. It's going to be $100 for the whole month of June, so you do have time to get it. I would encourage you, if you want to learn right away, this market is ripping people apart. That is very obvious from some people coming into my chat that's just ripping people apart, and I don't like to see that. I really don't. And that's why I was kind of talking to you guys like a dad today. I genuinely want what is best for you. I really do. I want to help, and I just need you to listen, not just hear me, not just hear what I'm saying, say there is a crash signal, so I need to buy. No, just listen and make sure things are confirming, please. All right. Thank you guys so much for watching. I look forward to streaming with you live tomorrow morning. This market can still continue to be crazy, so we are going to pay very close attention to it. I wish you nothing but love and luck in all of your trades going on with the rest of the week. Be careful out there, trade like water, and I'll see you tomorrow.
Peace.